everyone, it's Amit. So the last couple of weeks I did a couple of videos on ARK investments where I basically talked about ARK investments and its relative performance to the S&P 500, both in a short term as well as in a long term perspective. We talked about ARK investments and its portfolio composition. We spent some time talking about ARK investments and its top 10 holdings from a stock perspective as it relates to the 1-year return for each of those individual stocks. And we also spent some time talking about some of the risks associated with something such as ARK investments, which are primarily concentration risk related focus, because when you have 3 out of the 5 funds that they effectively have, which have a significant component or a significant investment on something such as Tesla, it does create some level of an implicit issue when it comes to that, when it comes to concentration risk. And then we also talked about some of the other risks that they have, which is largely around growth and innovation, and that being their primary focus or target area. And when you have something like that, it obviously creates some level of an undiversified portfolio in itself. And then the other risk that we talked about was really around some of the growth related or the expense ratios that they have when you have an actively managed fund. So of course, since I shot those videos and I released them, there's been a precipitous decline in the last week or so as it relates to ARK investments. And to be absolutely fair to Cathie Wood and ARK, this is not all to do with her. Okay, this has something to do more so with inflation related concerns that are permeating through the economy, and that has resulted in a significant decline in the NASDAQ in itself. And a lot of the stocks that are focused by ARK investments are so growth and disruption focused that they are very heavily skewed towards something such as the NASDAQ. And when the NASDAQ falls, it is further amplified when your entire portfolio is driven or based around growth and investment related stocks. So then what happens, of course, is Cathie basically goes out on CNBC and is tempering expectations as it relates to ARK investments returns in 2021, which is absolutely the right thing to do. But then what she also did was essentially double down on some of her investments related to Tesla as well as cryptocurrency by further influencing some of that. And at one point in the cryptocurrency game, it even resulted in Bitcoin's price essentially moving up. And then of course you fast forward a little bit more, and then I came across this absolute gem of an article that is titled "Record Redemption in ARK ETF Sparks Liquidity Worries." So now as these stocks are essentially getting hit, people are wanting to pull out of ARK investments ETFs because they're so concerned about inflation as well. And now of course this is going to have a significant impact to ARK investments, and I've highlighted some of the key sections of this article. So here it basically says a record $500 million redemption from ARK Invest flagship fund in a single day has led analysts to highlight the risks arising from the ETF's heavy exposure to illiquid stocks if outflows pick up pace. A 20% pullback in Tesla shares over the past 3 weeks, the biggest holding of the exchange-traded fund ARK Innovations, set up by star investor Cathie Wood, has triggered a rush among investors to sell some of their holdings. And of course, but accordingly to some who watch the fund closely, a far bigger problem could be its 15% plus stake in a handful of companies whose shares are relatively illiquid and potentially hard to exit when redemption surges. So what that is basically saying is that since you're so focused on growth and has got such significant ownership stake in some of these high growth type of companies, it's going to be very difficult to exit out of them should there be an absolute need to do so, because they're relatively illiquid. They do not have that many shares outstanding. There's not that much transactional activity that is associated with buying and selling those stocks. And when you have that type of a problem, it is a significant issue from a liquidity perspective when you own tons and tons of this type of stock. Then this article basically also talks about how investors yanked out $465 million from ARK Innovation on Monday, according to Refinitiv data. And then it also says the pressure on this fund this week has lured in short sellers when 100% of ARK Innovation shares available for shorting out on loan as of Monday, data provider FIS Aztec Analytics estimated. So you can imagine what's happening now with people or investors potentially smelling blood in the water and taking a short position as it relates to ARK investments and its ETFs, which can potentially also create a further problem for something like this. I mean, just think about what's happening with the whole GameStop and Wall Street bets and all that situation when it comes to short selling. So the punchline is this, right? Like, things are obviously not looking good. As you can see from some of these charts, shows what this decline I'm talking about, this precipitous decline across all five of their funds, and how it's effectively looking, and it's not looking that great. So the real question becomes is, okay, so now that we've established that this is not looking good, what is an investor potentially supposed to do? So the underlying notion to know here is this, right? That most of our investments, they're all focused on growth. They're all focused on disruption. And this is the sector that's going to get hit the worst or the most when it comes to something such as inflation. ARK Investments has very limited diversification, is very, very focused on something such as growth. And if this whole inflation-related risk actually holds true, it's going to be an absolute nightmare of a situation for ARK Investments. So, sometimes the question is asked, well, why? Why is it that growth stocks that primarily get hit when you have something such as inflation? Well, the answer to that is relatively straightforward, okay? When you have non-growth stocks, like, so you have airlines, you have, like your Disneys and, your theme parks and whatever, you can raise the price of something such as those on consumers when you have inflation-related concerns, right? So like a plane ticket, for example, you can just raise the price on it when people start traveling again. But when it comes to some of these growth-related things, you cannot necessarily, there's a lot of it is subscription-based revenue, you cannot just necessarily just uptick in price. So what happens is their cost of inputs, those are the only things that are going up, but the cost of what they're actually selling does not necessarily go up, which results in a significant operating margin impact. And when you have a significant operating margin impact, it of course kills the stock price. So the stock market basically anticipates that this is going to happen, which is what results in these growth stocks having a significant decline when there is an indication of potential inflation in the waters. And then you also have her exposure when it comes to something such as Tesla. Okay, so there's nothing really wrong with Tesla in itself. What I'm trying to get across here is, okay, so when you have some of these inflation-related concerns, people or companies, their cost of borrowing is essentially going to go through the roof. When you have cost of borrowing going up through the roof for some of these companies, what they're going to do is they're going to start reducing costs. One of the ways they reduce costs, unfortunately, is by adjusting their labor force, which is basically just a fancy way of saying they'll terminate people. And when you have unemployment starting to creep up, this creates a problem because unemployed people don't necessarily buy electric vehicles like those sold by Tesla. You can imagine if there is a decline in sales as it relates to something like Tesla, and then you have these exchange-traded funds that are so focused on Tesla, at least 3 out of the 5 of them are, when you have that sort of thing happening, it's going to kill these ETFs if we're not very careful around it. Well, now the question though becomes as well, will this whole inflation thing really pan out? And the answer to that is it's hard to say for sure. Now, I'm inclined to think that maybe this inflation-related thing, even though the bond markets are predicting something, may not necessarily be as bad as people think. And this is largely because I'm putting some reliance on the words which our Fed Chair Jerome Powell has basically used, where he's completely focused on preventing a significant amount of inflation from meandering its way into the market. I mean, he's gone out and said things like, this inflation-related trajectory is basically within the norms or what they would expect, and it's effectively under control. He's also said that there is limited level of correlation between M2 money, which is basically money that is exchanged in the markets, relative to inflation, at least over the last 40 years, and that is also absolutely true. That is charged to basically indicate that kind of like paradigm that has basically taken place. So, when it comes to things such as that, he's also commented that he's going to keep interest rates low. So he's said various things which would basically be fairly indicative that he's not going to let inflation just, go running around completely unabated. And I'm inclined to think that if it comes to, raising rates to basically absorbing inflation, or conversely, potentially the Fed going out and buying more treasuries, long-dated treasuries, they will take those necessary steps, and they'll probably go about on this purchasing binge basically before they actually raise rates, because he's come out and said that he's not going to raise rates until 2023. So that'll largely be at bay. So I'm inclined to think that this whole inflation-related concern does not necessarily, or hopefully does not become as significant as what one may think. So does that mean that it's essentially good for something such as ARK Investments? And the answer is that is for the short term, probably, right? It's probably okay, but you always know that there is this whole thing that is coming, this whole big ball of wax, this inflation ball of wax, because even though you hold off on it for a little while, it is not something that can be unabated forever, okay? Now, I know some folks are going to say, well, I don't know, Myth, what are you talking about? Because there is a lot of indication of inflation that's already happening. Just look at commodity prices. My response to that is, well, it kind of like depends, okay? So when it comes to commodities, how much of it is actually associated with inflation? inflation, or how much of it is just associated with pure supply and demand? Because people are quick to point out, well, look at oil prices. Oil prices have gone up. Well, oil prices may have gone up, but is that inflation related, or is that some level of anticipation that people will be consuming more gasoline when they start traveling once the economy and the market and everything starts opening up? The same thing with copper. People point out that copper prices have been going up. Well, is that really inflation related, or is it because there is more of a demand for electric vehicles and other electric related technologies, which is creating an increased demand for something such as copper? Okay, so there is arguments against some of these inflation related things that are essentially being pointed out in the commodity space, because some of it could just be pure supply and demand related. Now, of course, none of this is intended to be financial advice. Okay, this is just my opinions. So definitely do your own due diligence, consult with a financial advisor, do whatever it is that you need to do to get yourself comfortable before you make any investment related decisions. If you found value to this video, subscribe to the channel, hit the like button, ring the notification bell, and I will see you soon.